Well, thanks for coming in.
Thanks for having me.
I want to start with the retail sales. We were discussing off camera an increase of 1.1%. It was higher than what analysts had expected. I think around 0.6%.
0.6, yeah.
But my question is, it's still not enough to actually boost this economy. If you look at consumers, they add about 60% to GDP.
Yeah.
So at 1.1%, it's not really a prize for the economy, is it?
Yeah, so while retail sales came out much better than what was expected, still nothing to be overly optimistic about, particularly if we take it in context of last week's mining and manufacturing numbers, which contracted quite significantly and in fact show that first quarter GDP growth is going to be negative. So yes, positive retail sales, but nothing to be overly optimistic about.
And that health of the consumer is so important. We've seen the figures telling us today that consumers are buying furniture and some appliances, but they're still pressured, aren't they? There's tough electricity prices, you have fuel prices that are on the rise as well. So we're dealing with a very strained consumer here.
Yeah, we are. So what's also interesting is that if you look at the inflation of those components, particularly, so furniture and appliances, they're actually in deflation. So prices are decreasing year on year. Clothing and footwear inflation is it's below 2%. So it's partly attributed to lower prices, and I think it's also benefiting from cheaper imports that we're getting from China, for instance. Yeah.
It's interesting you say that, because theoretically when you learn about inflation you would think that that's a long-term purchase, the furniture and the appliance in particular, so it might suggest confidence going forward, but you're telling me this evening that this could be because of cheaper prices. Okay, let's get to inflation figures out today. Smack in the middle of where the Reserve Bank wants it, 4.5%. But are there threats to inflation, Paul? I mean, do you see this sort of number sticking around for some time, or could we see it rising?
Yeah, no, I think the outlook is for inflation to tick higher.
Yeah.
So like, for instance, if we look at the March number, what drove it higher was fuel price increases. So if we think back to March, petrol price and diesel increased by about 74 cents and 91 cents. In April, that increase was much higher, right? So going forward, we're going to continue to see that upward pressure on headline inflation. In July, we have electricity tariffs that will be coming effective as well. So there is a lot of upside pressures that we're going to be seeing on headline inflation. But nonetheless, it's still expected to remain within the 3 to 6% target band of the Reserve Bank.
You mentioned electricity tariffs here. How much attention, I mean, I suppose a lot, would you pay to what's happening with electricity prices now? Because not only is it a strain on the consumer, it's really threatening growth in this country, isn't it? It
is. Now, you know, when it comes to electricity, it's a double-edged sword, right? So firstly, it's unsustainable electricity supply. So a few weeks back, we were having load shedding. So on the one hand, you're not getting enough electricity to power your plants, but on the other hand, you're paying ridiculous prices for the electricity that you're getting. So that is going to hit the consumer. So like, for instance, if we then also go back to fuel, I think 80 to 90% of South African food is transported by road.
Yep.
So not only are we going to be getting a hit in our pockets from fuel purchases, but also that's also likely going to contribute to higher food prices as well.
Paul, thanks very much indeed for those insights. RNB economist Mpho Tsebe talking to us there about some of those economic indicators released today.